Imagine investing your entire life savings into the future of transportation, trains that promise to revolutionize the world. Now imagine watching it all vanish almost overnight. In the early 19th century, the Industrial Revolution was transforming Britain. Steam locomotives were a game-changer, faster than horses, cheaper than canals. When George Stephenson's locomotive Rocket debuted in 1829, it marked the beginning of a new era. Railways were not just transport, they were the future. By the 1830s, early rail lines like the Liverpool and Manchester Railway proved wildly successful. They cut travel time, reduced shipping costs, and opened new markets. People saw trains as the 19th century version of the internet, fast, transformative, and full of profit. By the 1840s, railway fever had truly begun. Newspapers were flooded with new railway proposals. Everyone, from wealthy landowners to middle-class clerks, wanted a piece of the action. There were over 1,000 railway companies proposed during the decade. Investors poured money into shares with barely any due diligence. Many companies didn't even have proper plans or engineering surveys. Parliament approved dozens of railway acts in a single year, and the Times called it the greatest commercial delusion ever known. Shares in railway companies soared. A few early investors made massive returns, fueling even more frenzy. It was a classic bubble. Greed and fear of missing out took over reason. But it couldn't last forever. By 1846, over £300 million had been authorised for railway construction, about half the gross domestic product of Britain at that time. That's insane. Then reality struck. Construction costs ballooned. Many railways turned out to be unprofitable or never built at all, and as interest rates rose, financing dried up. In 1847, the bubble burst. Shares plunged. Bankruptcies soared. Thousands of investors, especially middle-class Britons, lost everything. It became known as the Panic of 1847. Banks collapsed, businesses failed, and the British economy went into a sharp recession. In the aftermath, government regulation around joint stock companies tightened. The railway industry itself stabilized, but only after massive consolidation and restructuring. Many railways did eventually get built and became vital parts of Britain's infrastructure. But investors in the 1840s who bought into hype over substance, most of them never recovered. So, what's the lesson from railway mania? Whenever there's a new technology, whether it's steam engines, the internet, crypto, or artificial intelligence, there will always be a mix of real innovation and unrealistic expectations. Smart investors ask, is this real growth or just speculation riding hype? Stay tuned to The Fellow Investor.